Hi, this is Tim Horning, and this is Tuesdays with Tim. I'm the recovering CPA, now a real estate educator. This is the fourth installment, and this is titled Inflation and the Effect on Real Estate. The reason I'm doing these videos is to help educate people on what's going on with the real estate market. 5 years ago, I was recommending that people not buy real estate and in some cases sell the existing real estate that they were holding. Now the market has changed. There was buying opportunities. Yes, there's issues to deal with, and one of those we're talking about today, inflation. This is the most important topic because people fear the inflation and what it'll do to interest rates. As it brings interest rates up, well, will that take more potential buyers out of the market? That can happen. It can happen. But we can prepare for that. And like I said, let's respect inflation but not fear it. In the movie Gone with the Wind, you had Katie Scarlett O'Hara sitting there trying to get Rhett back, thinking about what's important to her, remembering what her father said. Tara, Tara, it's the land, Katie. It's the only thing that lasts. God's not making any new land. The good locations, like for instance San Diego County, Southern California, the weather's beautiful. The economic climate will return. The positive economic climate will return. So these are things to be aware of. In the North San Diego County Times, the article yesterday stated that gross rents increased in San Diego County North San Diego County by about 3%, and in San Bernardino Riverside we're also seeing increases. So that's a big positive. That takes us back to the ideal real estate investment. Remember we talked about that in the previous video. The I part is the income part. It's the gross scheduled rents minus the minus vacancy, minus insurance, property taxes, repairs and maintenance, the direct costs of owning the property. That figure, let's say an example, let's say it's $20,000. The real estate appraisers will use that figure in valuing properties. Now that cash flow also gives you staying power should there be a decrease in the real estate values. And we don't expect a huge drop. We've already seen the worst of it. So again, the cash flow that you receive from the property will give you any staying power to buy at these good times. The next part of ideal is depreciation. We'll talk about that in a minute. You need to calculate that figure to know how that will benefit you cash flow wise. After that, we have the equity. If you're purchasing the property correctly and you're buying under market, example, you're buying a $200,000 property, and because of the circumstances you can purchase it for $170,000, then that $30,000 gives you staying power also. The appreciation. Now we haven't had appreciation in quite some time in many areas, but what's happening is that as inflation increases, we will have increase in costs of materials, which we're already seeing. We'll also have an increase of labor costs. All those will add to the cost of building. So when we do have the migration coming back into this area again, and they start building again, if it costs more to build than it does to buy, that will bring values up, and that will give you some staying power also. Again, we're looking at this from the long term. As far as the last part of it, the leverage, now this is a tough one because we have beautiful, wonderful interest rates, 4% and sometimes below, if you can qualify. If you can, take advantage of that and look for property and get the good rates. If you can't qualify for that, there's other means of doing that, of acquiring the property. You can deal with the buyer, the seller, and they're willing to carry back paper. Great. If you can do a subject to, that also works. You can do an equity share. These are all things we can talk about in the future. I'm not going to get specific on them, but those are things. There's ways to acquire the property, get a decent price under market, and get a good interest rate. After you do that, then you would look at the net rental, the net taxable income or loss from the rental property. This is where we take that depreciation figure, the gross, the net rental income, and then subtract the interest and come up with in some cases a loss. That can also generate cash flow because of the tax savings. That gives you staying power also. In summary, we need to respect inflation, but not fear it. You need to be prudent and look for those bargains, look for the good the good values out there, and keep those comments and questions coming. If you have people that have needs in relation to real estate, we can help. I've got good associates and also people that I can refer you to for the needs as far as mortgage, as far as buying and selling, and that. I know this sounds like a commercial, but anyways, have a great week. And like Rep Butler said at the end, we'll compare that to inflation. Frankly, my dear, I don't give a damn. Anyways, this is Tim Horning, and this is Tuesdays with Tim. Thank you.